Assalamualaikum warahmatullahi wabarakatuh. I am Zurada binti Ahmad. We will discuss chapter 2 in our syllabus. The topic covered which is a stock dividend, stock split and stock right. After studying this chapter, students should be able to describe stock dividend, stock split and stock rights. Second, calculate the profit or loss from the investment. Okay, stock dividend, stock split, and stock rights is a type of dividend payment which does not involve cash payment. There have two types of return, which is price appreciation and dividend payment. Dividend payment is divided into two forms, which are cash dividend and non-cash dividend. Examples for non-cash dividend is stock dividend and stock split. Now we proceed with Part 1, which is covered stock dividend. It is a dividend payment to existing shareholders in the form of stock. It is a replacement or supplement to cash dividend. It consists of distribution of more shares of the corporation stock which does not involve cash. For example, if Board of Directors approve a 10% stock dividend, each stockholder will get a new share for each 10 shares currently owned. Reason for a stock dividend instead of cash dividend. First, to increase the number of shares outstanding. Second, to move some of the company's retained earnings to paid-in capital. Third, to minimize the distribution of the corporation's cash to its stockholders. Fourth, company may lack of liquid cash and it is impossible to provide cash to every shareholder. Effect of stock dividend. They have two effects. First, every stockholder will receive additional shares, thus increases the number of shares outstanding. Second, however, the company is no better off after the stock dividend, since the value of each share would decrease. Effect on equity account. First step. Now we look at the effect on common stock. Formula number 1. Number of outstanding shares equal to common share divided by par value. Number 2. Number of stock dividend equal to dividend in percentage times number of outstanding shares. Number 3. New common stock equal to number of outstanding shares plus number of stock dividend times par value. Now we look at step 2, which is effect on paid-in capital. First, increase in premium equals to market price minus par value times number of stock dividend. Second, new premium equal to old premium plus increase in premium. Step 3, which is effect on retained earnings. First, reduction in retained earnings equal to market price times number of stock dividend equals to reduction in retained earnings equal to market price times number of stock dividend. Second, new retained earnings equal to retained earnings minus reduction in retained earnings. Step 4, which is we need to construct new balance sheet. Step 1 consists of common stock and premium. Step 2. Step 3 is retained earnings. So we will get the total net worth, which is the amount will still remain unchanged. Okay, now we try to do this example. Below is a partial balance sheet of Darren Berhad. Common stock, which is par value 2 ringgit, equals to ringgit Malaysia 60 million. Premium ringgit Malaysia 40 million. Retained earnings ringgit Malaysia 50 million. Total net worth equal to ringgit Malaysia 150 million. The company declares 20% stock dividend. The current market price is 5 ringgit per share. Show the effect of stock dividend on the shareholders' equity account. Now let's try to this together. First, you need to calculate the number of outstanding shares equals to Common stock value divided par value equal to Ringgit Malaysia 60 million divided by Ringgit Malaysia 2 ringgit equal to 30,000 million shares. Second, number of stock dividend equals to dividend in percent times number of outstanding shares equal to 20% times 30 million shares. We will get 6 million shares. Third, new common stock outstanding equals to number of outstanding shares plus number of stock dividend times par value equals to 30 million shares plus 6 million shares times Ringgit Malaysia 2 ringgit. We will get Ringgit Malaysia 72 million. Now we proceed with increase in premium. Market price minus par value times number of stock dividend equals to Ringgit Malaysia 5 minus Ringgit Malaysia 2 times 6 million shares. We will get Ringgit Malaysia 80 million. New premium equal to premium plus increase in premium equal to Ringgit Malaysia 40 million plus Ringgit Malaysia 80 million. We will get Ringgit Malaysia 58 million. Okay, now we proceed with reduction in retained earnings equal to market price times number of stock dividend equals to Ringgit Malaysia 5 times 6 million shares. We will get Ringgit Malaysia 30 million. Now we look at the new retained earnings. Retained earnings minus reduction in retained earnings equals to Ringgit Malaysia 50 million minus Ringgit Malaysia 30 million. We will get Ringgit Malaysia 20 million. Okay, now we will construct new balance sheet. We will see that common stock equals to Ringgit Malaysia 72 million. Premium Ringgit Malaysia 78 million. Retained earnings Ringgit Malaysia 20 million. And total net worth Ringgit Malaysia 150 million. Okay, now we try to do this. Do you notice that the stockholders' equity is still the same? It is still Ringgit Malaysia 150 million. However, the total for common stock paid in capital and retained earnings have changed. Ringgit Malaysia 50 million has been transferred from retained earnings to common stock, which value is Ringgit Malaysia 3 million and Ringgit Malaysia 18 million to paid in capital. Amount transferred from retained earnings equal to market price per share times number of stock dividend. Ringgit Malaysia 5 times 20% times Ringgit Malaysia 30 million divided by Ringgit Malaysia 2 ringgit equals to Ringgit Malaysia 15 million. And we will calculate the amount transferred to first common stock equal to number of stock dividend times par value equal to 20% times Ringgit Malaysia 15 million divided by Ringgit Malaysia 2 ringgit times Ringgit Malaysia 2 ringgit equal to Ringgit Malaysia 3 million. Number 2, we need to calculate paid in capital equals to market price per share minus par times number of stock dividend equals to Ringgit Malaysia 5 minus Ringgit Malaysia 2 times 6 million equals to Ringgit Malaysia 80 million. Now, we proceed with the calculation effect on earning per share. The stock dividend dilutes earnings per share but has no effect on the value of the firm, wealth of shareholders, wealth of the stockholders, since they receive a compensatory increase in the number of shares outstanding. The earning per share should decline to reflect the increased number of shares. Earning per share equals to net profit after tax minus preferred dividend divided by number of outstanding shares. Now we proceed with the examples number 2. This example is proceed from example 1. Darren Berhad has a net profit after tax of Ringgit Malaysia 4 million. Calculate the earning per share before and after the stock dividend. Okay, let's do this. Now we look at earning per share before stock dividend. Earning per share equals to earning after tax minus dividend per share divided by number of outstanding shares equals to Ringgit Malaysia 4 million divided by 30 million of shares equal to Ringgit Malaysia 0.133 sen. And we calculate earning per share after stock dividend. Earning per share equals to earning after tax minus dividend per share divided by number of all outstanding shares plus an dividend of shares equals to Ringgit Malaysia 4 million divided by 30 million of shares plus 6 million of shares equals to Ringgit Malaysia 0.11 sen. Okay, now we will proceed for next presentation for stock split and stock rights. Hopefully, all students are able to understand the presentation under topic stock dividend. That's all for today. Thank you.